Happy Saturday. That's right. We're back. Saturday school. Used to be back in the day, if you had Saturday school, it meant you got in trouble at school and you had to go back on Saturday and serve detention. How do I know this? That's neither here nor there. Repping Indy today, Indianapolis, my hometown. We're trying to get through this together. This is day 6 of Recession-Proof Your Life in 30 Days. I'm your host, Peter Don, Pete the Planner, CEO of Hey Money and Your Money Line. We are professional financial problem solvers. As I mentioned yesterday, it just so happens the entire world is currently having financial problems. So go figure. I do feel good, renewed, and reinvigorated today, it being Saturday. Need a little bit of rest, right? So today for me, Saturday is about rest. We're doing this podcast, video live streaming event with you, and I'm doing some podcasting with my kids just to keep them entertained as well, giving my lovely wife a break because she's been the school teacher all week long. All right, everybody. I was hoping today here on Recession-Proof Your Life in 30 Days that we'd be able to talk about the stimulus package that Congress is working on right now, but they were supposed to pass that bill at midnight last night or by midnight last night, and then again by noon today. They have not yet done that, but we're seeing reports that it could be done pretty soon, which is good news. And I bring this up because people need some money now, right? It's the 21st of March. We're 10, 11 days away from mortgage and rent payments being due. That being said, we just heard from Ben Carson, the Secretary of Housing and Urban Development, who said that all evictions and all foreclosures are officially frozen in our country as people try to get back on their feet. Now, we still want people to make mortgage payments when they can, still want people to make rent payments when they can. So don't just ignore those obligations if you can make those payments. The reality is you will slow the economy even more if you can make those payments and you choose not to make those payments. And you've got something else to deal with later when you're going to be rebuilding your finances. Our goal throughout this 30 days, on which we are in day 6, is to cut at least $500 out of your monthly spending. For some of us, we are going to be forced to cut probably 95% of our spending based on unemployment. A number of businesses right now are doing a very courageous move, which is to shut down so that their hourly workers who are currently getting no hours can file for unemployment. If a company stays active and doesn't lay off their employees, yet they don't actually pay their employees, then those people can't get any money in the form of unemployment insurance. Some other challenges we've been running into, of which I wish there were better solutions. You have people starting jobs in the last couple of weeks for the first time. I talked to a gentleman yesterday in central Indiana who's struggling with unemployment. But the challenge here is he just started the job, so he doesn't qualify for unemployment benefits. And it is a really tough situation. We're hearing more and more stories just like that. But again, I actually believe it is a very selfless, courageous act for business owners to lay off their staff. I know that sounds terrible, but if you are not paying people because there are no hours, they can't put food on the table. They can't pay their bills. They can't survive without income, and unemployment insurance can do it. There is a myth floating around that just because a person owns a business, that they're loaded and they've got money and a ton of income and a ton of assets. Let me tell you, that's just not true. It's not true at all. There are some small business owners that have been able to create stability, but there are more that have not. They are just as hand to mouth and paycheck to paycheck as the workers they work right alongside of. Next thing we're trying to do during this program is to press reset on our financial lives. A lot of times, let's say 2 weeks ago, you look at your financial life and it's a particular way, and you wonder, well, how did it get that way? How are these sets of habits here? Why are my payments what they are? Why do I have these obligations? It's a good question. And pressing reset on that and under normal times is a very difficult thing to do because you have to deconstruct your entire monthly cash flow. Silver lining is our monthly cash flows have been deconstructed, I should say, right? So this is forcing a lot of people to press reset. I don't say that glibly, right? I'm not saying that in the sense that, well, you're messed up, might as well fix it. I understand what I'm asking, But if you dig in, especially the 30 days here in our event, you should be able to make some progress. And finally, we want you to stop guessing. Stop guessing that it's going to be okay. You can have faith that it's going to be okay, but if you get to work with the lessons we're working on today and other days, you can take some of the guesswork out of the process. As always, you can always get additional personalized financial help from my team at callheymoney.com. We're a group of professional financial problem solvers, and for about $20 a month, we can dig into your financial life and help you make tough decisions, strategic decisions that are more important than ever. So go to callheymoney.com. You can sign up and talk to your expert as soon as Monday. They don't do the stuff on the weekends, but you can sign up now and pick your appointment time and just use the offer code CHEESE. We'll give you a discount. Why cheese? Why not? Who cares? All right, day 6. Here's what we're doing today. We're going to talk about helping family. We're going to talk about receiving help from family and the do's and the don'ts and the ins and the outs and all those other opposites. We're also going to talk about refinancing your mortgage. Can that make sense? Does that make sense? And what would it look like in this current environment? So let's dig right in. Family and friends. Okay, so this is an interesting topic, a very interesting and arguably uncomfortable topic during normal times. During a financial pandemic, it's especially interesting because the chances are you have a family member on your equal playing field, whether it be a sibling or a cousin or something like that. Maybe someone up the generational chart, including your parents, your aunts and uncles, your grandparents, and potentially down the generational chart, which would be to your kids and grandkids. There's a good chance that someone within your family tree is suffering some unemployment and income instability. And as often happens, family jumps in to see what they can do, to see if they can turn the tide and help people get through what they're dealing with. And sometimes that makes sense. Of course, in this period of time, we want to help as many people as we can. It has just been my experience, especially in the face of tragedy, when you're trying to triage a situation, that there actually is a time when it is inappropriate to help a family member or friend, which is very difficult to say, possibly difficult to hear, but it could save your own financial life. And the idea is very simple. This has everything to do with stability. I'm going to give you one of the lamest analogies / metaphors / I should know the difference. My wife's an English teacher. That I could possibly give you. It's completely overused, but it applies here, and I'm embarrassed to use it. When people used to fly, and you'd be on an airplane, and in pre-flight, they'd give you instructions that if the oxygen masks come down, you are to put it on yourself before you assist the person next to you. That is not because they're encouraging people to be selfish. It is a pragmatic solution to create stability and virility in a person so they're able to assist other people. If a person is not stable, if they're not getting oxygen flow, they're of no help and assistance to others. In a time like this, if you aren't stable, but you happen to be relatively more stable than someone else, it doesn't necessarily mean you should help the other person. That's a really tough thing, right? There's a lot of great people in our country that would do anything. They'd give you the shirt off their back, even if they were struggling. But it's just not necessarily practical in this situation. That's not to say you let the person drown or you let them suffer or die or anything like that or anything dramatic like that. But it's to say you need to have a level of prudence before you do it. And to me, it begins with the concept of, are you helping someone once, or is it actual perpetual assistance? The best way to understand this is to understand how an adult can help a parent, okay? How someone who's middle-aged help their elderly or baby boomer parents. Because from a financial perspective, and here's what that looks like. Let's say you're floating along, you're in your 40s, and you realize that someone in your family, your parents or aunt and uncle, need financial assistance. Of course, you want to jump in and help them, send them a check, pay off a bill, give them a chunk of money, whatever. But you need to determine whether that assistance that they're asking for solves any problems, right? Because if someone is struggling and they say, hey, I need $200 for this or that, sometimes paying them the $200 doesn't even matter. It doesn't actually put them in a better position. This is not to say that you don't trust that the person needs $200. It's to say that it's a bigger issue than that. Sometimes as a person has an isolated financial incident. Let's say they owe someone $3,000 and they got to get them the money. And so their solution seems to be to borrow the $3,000 from you to solve this hypothetical problem that doesn't really exist. Does the $3,000 actually solve the problem, or does it just shift the problem onto you and become your challenge? That's part of the issue. Maybe a parent is got a broken down car, and that broken down car is preventing them from going to earn a living or earn an income, whether this is, again, your parent, your friend, a family member, whatever. By helping pay for the car repair, it is a one-time incident, and that could arguably make sense if you can afford to make that contribution to their financial life. However, sometimes if you go to help someone and you have not taken the time to identify the stability of their life, even, never mind yours, we'll get to that in a second. If you've not taken a chance to understand their stability, that money may be needed every 30 days to keep the thing afloat. Now, if that's in your wheelhouse and that's something you want to do, I would be very transparent upfront about what your ability is to help. I feel like right now everyone is so scared and so sensitive about their finances that they might be shy to have transparent conversations like this. They may feel bad about saying, this is my ability to help you, or this is where my ability stops. But what I'd like to tell you right now, more than ever, we need honesty and transparency with each other. We need to level expectations. That's what employers need to do with employees. That's what employees need to do with employers. We just need to have honest conversations so that assumptions don't get people hurt and in trouble. So if someone asks you to borrow money, whether it's a family member or friend, evaluate the ask a bunch of questions and say, look, I have some questions I'd like to ask you to evaluate whether this is something I can do. Right? So you're not the bank, you're not underwriting the loan, but in a way you kind of are, right? Because if they could just go to a bank and ask for the money, they probably would, and there's likely a reason they can't, which means it's a risky situation. And I know that you're your family member or friend, but if you are also suffering from financial instability, taking on additional financial risk in the form of a personal loan to someone else can stop making sense real fast, right? This is also to say, let's flip it around. Let's say you need help from a family member or a friend. You need it. I mean, it is your lifeline. Someone throw me a lifeline, and it is in the form of, Dad, can you send me $600? Figure it out. Write a plan out. Set some expectations. Give them as much information going into it as you can. Not because you're trying to trick them or impress them or anything like that. You're just giving them the information they need without fishing for it to make a reasonable decision for themselves. And if they can't help you, do your best to not be upset. It is a scary time, and people got to make decisions for themselves. It's an uncomfortable conversation. I know, right? So one last note on this before we move on to mortgage refis. I do think it's important to understand that your stability really matters here. Just because I'm relatively, hypothetically, more relatively stable than you are, doesn't make me objectively stable, right? I'm not a tall man. I stand 6'6". No, I'm kidding. I'm 5'9" and about 5'8". So I'm not a tall man, but compared to my significant other, Mrs. Planner, I'm a tall person, right? But I am not tall. I am just taller than her. The same thing goes with stability. If you happen to have relative to stability, it doesn't make you stable. And so before you go and try to help a family member or friend in that capacity, make sure that it doesn't compromise your stability later on. That's really important. Some cultures are really good at this. They really understand this. It's not, sounds like a cut, but I've studied it. It's not a cut. It's just a cultural difference. Most Americans don't have that sort of multi-generational wealth and income pooling that some other cultures have. Oddly enough, Hawaiians, they have a culture that allows them, of course they're Americans, but a different part of the country, right? They have a culture that sometimes they'll have multi-generational housing, and they will do some income pooling. Other cultures, both in Central and South America and in Europe, they do more intergenerational wealth blending. And so this concept that we're talking about is not as foreign to them as it is to us. So if you've never helped someone financially, tread lightly and understand that honesty is your best policy. If you have a specific question about this, I'll do my best to answer it. My hope is if you're really struggling right now and you need to let out some emotion, you need to vent, you need to do anything like that, please use me. All right. Just ask Pete at PeteThePlanner.com. That's ask Pete at PeteThePlanner.com. I can't necessarily solve your problems, but I will hear you out right now as it relates to these loans to a family member or friend. All right, let's talk mortgage refi. As many of you know, in the last several weeks, mortgage rates have come down from what they were about a month ago. I believe it was March 6th. I could be making that up, but I feel like it was March 6th. I got an email from a friend who's in the mortgage business, and she said, right now there is a 15-year mortgage rate at 2.75%, which I'll tell you is shockingly low. It's really low. Unfortunately, or whatever, reality set in, those have trickled back up in the last couple weeks. But it's still, there are relatively low interest rates. And so it might make sense to you to explore a refi for a couple of different reasons. So what I'd like to do right now is explore those different reasons and then talk to you about the reality of what a mortgage refi could look like. If you don't know, if you have a mortgage, which means you live in a house and you're consistently buying your home back from the house, or you're buying your home back from the bank, I should say. That's sort of the idea of it. You make regular payments. You have a set interest rate on that mortgage. And if you refinance, like get another loan at a lower interest rate, it can impact you positively because you're theoretically paying less interest or you're paying off the loan faster. In an environment like this, a lot of the rules of do this on a mortgage refi or don't do that, they kind of get thrown out the window because this is an unusual situation. As you've seen over the last couple of days in our program here, there are some tried and true financial principles like get out of debt as fast as you can, which go completely out the window during what we were calling a financial pandemic, right? The rules are different. And that's why sometimes technical financial answers aren't very helpful in times like this because we need practical solutions. I mean, technically laying off your entire staff doesn't make a lot of sense, but it's a practical decision because then they're able to get food on the table. Do you see the difference? So from a mortgage refi standpoint, here's people that might consider doing it. And here are other people that would also consider doing it, but it would not be a good fit for them because of their current reality. Let's say you currently have income and job stability, but you have a bit of concern that you will be forced to take a pay cut or someone else in your household will be forced to take a pay cut. And so you will have tighter cash flow. You could, if you have a higher interest rate, take a look at refinancing your mortgage to get your payment down to a more reasonable level. That means if you have a 30-year payment, you're 4 or 5 years into it, and you've got a 4.85% interest rate, and you could now get a 3.56% interest rate, maybe explore that. It resets your mortgage to 30 years, which makes it a little bit longer, but it frees up that cash flow to take some of the pressure off. That can make some sense. There are other people out there that have already lost hours or already have income stability. And of course, they want to refinance their mortgage. But when you go to apply for that, you have to talk about your current employment reality. And so a lot of people in that situation will not be eligible to qualify for a mortgage refi. The other unusual element to a mortgage refi right now is that oftentimes someone from the bank or a contractor of the bank has to come out and do, in some case, a physical appraisal of your home inside and out to qualify for that bank to take on your loan. Man, I can't think of a worse time to have a random person in your house and to walk around and poke around things. So that's complicated too. Some banks offer what is called a streamlined mortgage program, which means you don't even really have to qualify too bad. You might have to say you're still employed, but they may not require you to do a home inspection, which is a pretty good idea given that we're all what are we doing? We're sheltering in place. We're quarantined. We're doing all these different things, right? Mrs. Planner and I thought we don't really want anyone else in our house right now, not because we're rude. It just doesn't seem like a safe thing for anyone involved. If we have something, we could pass it to them. If they have something, they could pass it on to us. And who knows what other homes they've been in doing the same thing. No offense to them, but we're all in the same boat. We've got to try to flatten the curve, and keeping a distance from each other is a good way to do that. The impact of refinancing your mortgage, Normally, I want it to be that you're paying less interest, and I want it to be that you are paying off your house faster. As much as 3 weeks ago, 2 weeks ago, I was giving that advice. Well, that's changed. If you want to use your mortgage as a tool to help you in this challenge that we're in, all of us are in, then I would argue that you would want to decrease your payment, because there are different things you can get out of a mortgage refi. And one of them is a decreased payment. I typically actually don't like that solution because I'd rather pay off a mortgage faster. But now, if you are nervous about what your income looks like, doing a refi to increase cash flow is not a terrible idea. It's not going to kill you. It's not a terrible idea. You obviously don't want to go a lot of out of pocket on closing costs and refi costs. You might have to work that back into the loan, but you don't want to take a big check to the table as you close this thing. So if you have questions on that, call a trusted mortgage broker, have them run numbers for you, and make sure you let them know what you're hoping to accomplish with a mortgage refi. All right. So that's it for day 6. My hope tomorrow is maybe we can do a little Q&A at the end of this. You can just enter your questions right there on Facebook. Of course, I post this to YouTube as well. So if you have questions, I have to jump in there after the fact. I won't be able to answer them live. All right, hey guys, we're in this for the long haul. If you are not prepared to be in your current reality for at least 3 months, you are unprepared. That's not judgmental. That's just honest. I am in the midst of preparing my own family to be in this for 3 months. My coworkers are doing the same thing, friends and family. I know how hard it is to try to get through each day of this, right? I know, and I'm sorry you're going through it. I really am. But I'm going to push you a little bit because I need you to try to have some semblance of a plan for the next 3 months or so. My goal tomorrow is to start with whatever the stimulus package is, walk all of us through it, and set some expectations of how that money might impact your life. Until then, if you've got something pressing you need to let off your chest, I'm the guy for you. I promise. I want to listen to you. I'm not judging you, right? It's okay to talk about this stuff, right? We were all in this together. And if you are not allowing yourself to feel emotions around this out of respect for other people who have it worse, while that is a very kind thing of you to do, it doesn't make a lot of sense. You can't martyr your own feelings out of the respect for other people's pain. It doesn't work like that. That's not how emotion works. Let it out. Complain to me. It's not like I'm going to go to Facebook and say, oh, Gary, makes $100,000 a year and he's in trouble. No one's going to do that, right? We have to stick together by allowing each other to grieve whatever financial realities we're all dealing with. I'm done for today. I am done for today. I'm going to go hug my kids. I'm going to go outside the best I can and keep my distance from people, but just enjoy nature, get a little bit of vitamin D so we can do this tomorrow. Tomorrow is day 7. I'm excited to share it with you. So if you need anything, I'm here for you. And I will see you tomorrow at 2 p.m. Eastern right here on Recession-Proof Your Finances in 30 Days. I'm Pete the Planner.